What is up, everyone? Welcome back to the trading world. Today is Thanksgiving, so happy Thanksgiving to all of you guys. We're going to be reviewing price action for yesterday, November 26, 2025, since I did not review price action yesterday and make a market recap. And I'm also going to be showing how to trade CRT today, and I'm going to show you very specifically where to enter and how to take an even more precise version of CRT as well afterwards. And this is something that no one ever told me, no one ever showed me how to trade CRT. It's all gate kept behind courses, so I just thought, you know what, let's just give it to everyone for free. Because I've over my many months and years back testing, I've slowly started to figure out, okay, what repeats itself and when is CRT going to work. And if you don't know anything about what CRT is, I'm going to explain it. So just sit down, relax, enjoy, and we're going to jump right into it. And we'll also be reviewing the market in detail as well. So with that in mind, first things first, I'm going to start out with the CRT because that might be why you clicked on this video. So you probably want me to just get into that. And then for those who want to stay for the market recap, you can stay for that after. So what is CRT? Well, it is basically when you have a candle or series of candles. It can be a single candle or it can be a series that form a range. So, for instance, it could be a single candle like this. We sweep out the low aggressively. We close higher of this candle. So there's that sweep. We know with a high probability that the draw on liquidity is now the opposing end of that candle. So here you can see we sweep out the low. Bang. So we sweep out the low. We close higher. Now we know it's a sequence of candles where specifically you want to see a candle or series of candles. One side of it gets swept, closed higher. Now we know candles 3, 4, and 5 are likely to expand the opposing ends of the candle range. So I'm showing this as one candle, but this can also be a series of candles. It doesn't have to be a singular candle. So let's just say all we had in our chart was these two candles. We would know with a high probability that candles 3, 4, and 5 should expand to the opposing end of this candle, this original candle. But as well, like I was just saying, it can also be a series of candles. So let's just say, for instance, it's not just one candle, but it's 3 candles. So it could be 1, 2, like this, 2, and then Actually, let's just use 2 candles for now. But just know it can be more than 2. And then let's say candle 3 is the one that sweeps out the low and closes higher. Since it's a very obvious series of down closed candles, we can use this whole entire series. And actually, we know the drawn liquidity should be the high of the series of candles in this case. Right? So now we can expect candles. What is this? So this was candle 1, candle 2, candle 3. Now we can expect candles 4, 5, and 6 to deliver to the opposing end of the series of candles, right? So it could be a single candle or it can be a series. So here's the CRT low. It gets swept. Now we drop the CRT high. So now how do you actually trade this? Because now we have the idea of what it is. It's a candle or series of candles, aka a candle range. One side of that range gets swept and then closed back within that range. Now we know the drawn liquidity is the opposing end of that range. But how do you actually trade this? Well, I never joined like any of the mentorships or by Romy or anything. I just have had months and years of just observing the market, observing the best way to trade it, and from my back testing, right, you're going to want to take the low or no, the close or the open of this manipulation candle, whichever one is lower in this instance. If it was the reverse, right, a series of up close candles and then a sweep and close higher, would be whichever is highest, the close or the open. But in this case, it's whatever is lowest, the close or the open. Your optimal entry point for CRT is going to be below whichever is lower, the close or the open. So, in this case, it is the open. Since this is the open of the manipulation candle, it's lower than the close, right? So, whichever is lower, the close or the open, and you can see anything below the open is going to be optimal, an optimal entry to target the opposing end of that candle range. So the way you would take this is right as soon as, in this case, if this was like 15-minute candles, for instance, right as soon as 12:45 opens and these three candles have all formed, you're now looking to basically enter at that closing or at the opening price. And then I like to put stop loss a little bit below this candle wick, because sometimes the market will still sweep that initial candle wick, and then you target that CRT high, and usually it's going to be in the ballpark of like 2 to 4R. And so this, if you ever hear me refer to the Genesis entry or the Genesis model, this is what I'm referring to. It's just a name I gave it because no one ever taught me how to trade CRT. I just kind of like figured it out over time, and I will show you guys specific examples. But if you ever hear me refer to the Genesis entry or the Genesis model, this is what I'm referring to. Just how to trade CRT. Enter at whatever is lower, the close or the open, and then we expand to the draw on liquidity, which is the CRT high. So it would look something like this, where let's say we get filled and then we expand to the opposing end, right? Or maybe it might look something like this, where we actually dig deep into it and then we still expand to the opposing end, right? Okay, so now you guys know what CRT is, how to trade it. So I'm going to go through some real examples from today. We had two amazing examples that I'm going to go through. One that happened before in the pre-market, and then one that happened in New York session. So here's the first example. I have screenshots of them, so I'll pull up the screenshots after I mark it up, but I'll show you the first example. So the first example is right here. We have a range of down close candles. So here's that range of 3 down close candles. We then sweep out the low and then close higher within that range of candles. What does that tell us? It tells us the drawn liquidity is now likely to be the high of that range of candles, right? So you see how this candle is the manipulation candle that sweeps out the low and closes higher within this range of candles. So now we know optimal entry for CRT, in this case on the 1, 2, 3, 4, 5th candle, is going to be below the open of the manipulation candle. So that, once again, it's Genesis entry. And so I'll show you guys the screenshot of this that I took. I'm going to pull this up. So this was yesterday at 7:30 a.m. So this was definitely in the pre-market, but still, right? So here's the screenshot I took. So here's how you can take this. Like I said, usually just taking this as the Genesis entry, it's going to be in the ballpark of like 1.5 to 4R. And then as well, you can see here's the next one, right? We have a giant down close candle. It's also important to know the bias, right? The bias was there was a high time frame swing high over here. We had a 4-hour fair value gap, so we know the market's moving from a fair value gap, which is the market moves from fair value gaps to old highs. So the market's going from IRL, this 4-hour fair value gap, to this external high. I'll show that more in later after I finish the CRT portion. But like I said, we have this down close candle here. We sweep out the low, close back within that range. What does that tell us? That tells us the drawn liquidity for candles 3, 4, and 5 is likely to be the opposing end of that initial candle. So we sweep out the low on candle 2 right here. We close higher. So now we take the open or close, whichever is lower of that CRT, and we look for our entry below that. And then the drawn liquidity is now the CRT high. So check that out, right? We go below the open, and then we drop to the high. So here's a screenshot of that on the lower time frame. This one was at 10:16. So once again, 15-minute candles entering on the 1-minute chart, and it's going to pull up in just a second. So this was just a single 15-minute candle. We swept out the low. Then we look for our entry below the open or close of the manipulation candle, whichever is lower, and then we draw back up to the CRT high. And yeah, you can see how nice this is. This one was like 2.5R, and yeah, the regular version without time frame alignment will give anywhere from 1.5 to 4R. Next, I guess that finishes the CRT portion without time frame alignment. Now, I'm going to go over how you can align time frames, and you can get an even crazier, higher RR sniper entry, and I'll get into that in a second. But first, I want to talk about how you could have determined bias. So, bias today was incredibly easy, actually. I talked about this in my last 2 videos, where we had... I'll pull that up in just a second, but first I want to talk about this. We had a 4-hour fair value gap, and if you don't know, I have a short form video that explains IRL and ERL, but the market will move from IRL, that stands for internal range liquidity. The market's going to move from fair value gaps to old highs. So IRL is a fair value gap, and ERL is an old high in the market. So the market moves from fair value gaps to old highs. Or from if it's a downtrend, it's going to move from an old bearish fair value gap to an old low. So the market moves from IRL to ERL. So let's pull up the higher time frame. You can see what I'm talking about. Zooming out, we have a 4-hour gap right here. This was on Wednesday. This was yesterday. We move from this 4-hour gap to this high here, which, if you watched my last 2 videos that I posted, you will know that this was just a higher time frame CRT as well, right? We had a 4-hour series of down close candles. We swept out the low. We closed higher. Look for a optimal entry point below whichever point it's obvious that we close back within the range, which would be here, and then we draw back up to the other side. So we know this is the high. This is the drawn liquidity because this is the 4-hour CRT high. So we move from this 4-hour gap to this external high. So from IRL to ERL. You can see that happens right here. Let me turn this off here. So pretty cool. And then, yeah, I'll go into how you could have aligned time frames and got an even more precise entry. So let's go ahead and do that. So you guys already saw those trades, so I will just show you the screenshots that I took of the more precise versions. So the more precise version is gonna like 1.5x or like 1.75x your RR. So it's gonna be like, it's just gonna be even higher RR because you've aligned time frames. So let me pull this up. Waiting for it to load. So in this case, we had this was the initial one. Remember, we had the series of 3 down close candles. That was the CRT range. We swept out the low, closed higher. So normally we would just enter right there. But so this was a 15-minute CRT, so 15-minute down close candles, and then they close higher back within those down close candles. An entry on the 1-minute chart is the normal entry, so it's a 1-minute Genesis entry. You can use this Genesis entry as like a 1-minute PD array. You can kind of use this as a 1-minute PD array, and you can actually go down to an even lower time frame and wait for 15-second change in state off of this 1 minute PD array. So 1 minute Genesis entry, 15-second change in state, and then we draw up to the CRT high. So that's pretty cool. And then same thing here. Here was the other one where you align time frames. So we have same thing, 15-minute candle range, 1 minute Genesis entry, and then we have a 15-second change in state. This is where it becomes very obvious that we're gonna go higher. You can go break even right here, and then we deliver up to the CRT high. And like I said, this is gonna like double your RR or whatever, because you can have a tighter stop loss. So this is how you align time and price with CRT. So that finishes the CRT portion. I'm just gonna review the market. So you can stay for this or you cannot, up to you, but I do these every single day, so I highly recommend. If you want, you can watch those and you can learn a lot. So anyway, let's go ahead and just continue to review the market. So the cool thing about this entry actually is I called this live, and I would have taken this. I would have taken this exact entry, but Top Step was down. So that's not fun, you know, but I would have taken this exact entry. And to prove it to you, I have a video I'm going to show you guys. This is pretty cool. Check this out. So I'm going to pull over Discord here. I have the video. So it's just taking a while to load. But I post these videos all the time. Anytime like something cool happens that I call out live, I'll post it in live clips. So I'm waiting for it to load. Nothing I can do about it being this slow, guys. I'm sorry. Okay, live clips. Okay. So we had, in this case, we had a SMT with old low. We have an obvious accumulation range. For those who know my other videos where I talk about rejection blocks, we have a 1 minute rejection block that swept out liquidity here. This is the Phoenix model. And then we had a 15-second change in state off of this. It occurs exactly at a 369 time. So if you don't know, I have a video. You know what? It's too much to explain in this one video. But if the digits of a number add up to 9, it's going to be a higher probability time to enter. That occurs right here. You can enter right there, go break even at that high. And then, yeah, we go expand. And to show you guys I took this, check this out. All right, I would have taken it. Check this out. Here, 1 minute rejection block. I would love to take this 15-second change in state here. Occurring at a 369 time. So this trade is magnificent, and I would love to take this, but unfortunately Top Step is not going to let me. But this is magnificent trade right here. So thanks a lot, Top Step. You owe me AR if this hits. So we're getting the 369 time right here. So we need to get the closure right at 1026. So we got to get the closure right here. If we get the closure right here, it's valid. What did I say? What did I say? What did I say, bro? So you guys can see that I called that live, so it was not hindsight, and I would have liked to have taken that. But anyway, it gets cooler. Guys, this is just the beginning of today. Today was such a cool day. We had, at the low there, like I was saying, we had a Phoenix model. And if you don't know what Phoenix model is, just go watch the videos I made on Phoenix model. First, watch the video where it's called a short form video called Powell Trades Model. Go watch that. So it's that one's gonna explain Phoenix model best. So look up the short form video I have called Powell Trades Model, and then go watch the Phoenix model real examples video that I made, and then from there you'll know what Phoenix model is. But check this out, right? We have okay. So ignore this for a second, right? We have a 1 minute rejection block that sweeps out lows. We have SMT with this low, and then we come tap that rejection block. Once again, look at the signature with this rejection block, right? We get a strong, good signature to this rejection block. This rejection block takes this. There's a consolidation over here that it takes. We had SMT with the S&P 500 with a low over here. We were delivering from this new week opening gap. We come back in. We tap that 1 minute rejection block perfectly, so your entry could go right at that rejection block. Stop loss at the low. I don't have a good screenshot of it. But you can see how that was perfectly the entry for Phoenix model. Stop loss at the low of the rejection block. And then we go higher. And then I was experimenting. That's what this is called. I was experimenting with a new idea where basically when we have Phoenix model off a new week opening gap, it's still experimental, but I'm thinking that could be higher probability where we get a Phoenix model off a new week opening gap. And yeah, you can see how we got that perfectly. So yeah, going back down to the lower time frame here. Once again, it's being slow. There's nothing I can do about that. I think I need to restart my computer. But I do want to review everything for the day, so this one will probably be a little bit longer, and that's fine. So just to show you guys the Phoenix model in more detail, right? We have SMT with this low right here. So this is a partial 90-minute SMT, but I'll just mark it out as a regular SMT. And then we take this consolidation, so we sweep out, well, there's no obvious swing low, but I can tell that we take the stop losses of that consolidation. So we have SMT with this low. This is just a giant range. So accumulation. SMT with that low. Once again, to show you guys that there actually was SMT, I'll pull up the S&P 500. Yeah, guys, this one might be longer, but I think today was a very valuable day, and I think today was one of the coolest days we've had in a long time. So, in my opinion, it's worth it. Okay, so here's the low, 752. Here's the low on S&P 752. So right here, there's SMT. You can see that there's SMT with this low right here on the S&P 500. So this rejection block takes the stop losses of this consolidation. So now we have this 1 minute rejection block. So what the things you need for Phoenix? You need SMT. You need a good sized rejection block that has good signature to it. You need, ideally, for it to take liquidity. In this case, it takes out this consolidation. So we need it to align obviously with AMD. So in this case, obviously we had AMD. So everything lines up perfectly. We have, there we go. We have that rejection block. So this is a Phoenix entry right here. And then we deliver to the opposing end of that range. Check that out. So there's your Phoenix entry. Stop loss goes at the low or slightly below the low of the rejection block, and then we deliver higher. No Phoenix zero entry today, meaning we enter at the midpoint of the rejection block. That doesn't get tapped, but dude, that's gonna happen sometimes. You know what I'm saying? So amazing Phoenix entry right there. That would have been 7.4R if you held it up there, and then 10R if you held it probably to the CRT high or something like that. From there, I'll just go through what else happened for the day. So as I said, it was an obvious market maker buy model. We knew the drawn liquidity was higher because of that 4-hour CRT. I should go show you guys the 4-hour CRT. Okay, let me show you guys the 4-hour CRTs just so you guys see what I'm saying. So let me zoom out. 4-hour. Right, we know the drawn liquidity is higher because we had that 4-hour for value gap and then 4-hour CRT high. And I wish this wasn't being so slow right now. Unfortunately, it is. So I don't know what to say about that. Okay, so here's the 4-hour CRT. We have a series of down close candles there. We sweep out the low, close higher. So I'm not going to get in depth with making it look nice. So we know the drawn liquidity is the opposing end of these series of down close candles. And so once again, take the open or close of that manipulation candle, whichever is lower, and you can see that that is optimal entry point. And now you can target the opposing end of this range here. See this? So bang, deliver up to that CRT high. And yeah, once again, here's the down close candles, sweep the low, close higher. Now we know the drawn liquidity is the opposing end. And then once again, we have that 4-hour fair value gap. We deliver from the fair value gap. We deliver from the fair value gap to the old high in the market. So from this fair value gap to this old high. Okay. So now you get why the bias was bullish. We needed to deliver to that CRT high. So here's the market maker buy model. The entire thing framed out. So let's wait for this to load. Here's the entire thing framed out. Oh, and then remember how we reuse that new week opening gap here. We take all the true opens. We take midnight. We take 7:30. So this is the market maker buy model on the 4-hour. And then we have the 15-minute one right here delivering from this 15-minute gap. And we get accumulation, manipulation, distribution up to the CRT high. Sorry if I can't make it all make sense because it's a lot. It really is. But yeah, I'm just trying to show you as much as possible, while also not having to explain everything, because then this will be like a 4-hour video, right? Obviously, I want to explain as much as possible. Another cool thing about this low time frame market maker model is this perfectly aligned with our gold block dealing range. So if you guys don't know what gold block is, go watch my video, a short form video explaining gold block. But it's gonna tell you, okay, this is where the market maker model will likely form. So we should ideally sweep liquidity into the low of the dealing range. You can see that occurs here. So we sweep liquidity into the low of the dealing range. Then we should get the fair value gap for the 2022 model right here. That occurs right here. So it's telling you where everything should form. And to show this to you, that this occurred, I can go to the 1-minute chart. Everything's being so slow. If you're still watching, you're a goat, bro. I don't know. It's impressive if you're still watching. So check this out, right? Here's our dealing range. So get this indicator. Watch my video on gold block if you haven't watched it. But here you can see That rejection block forms at the low of the dealing range. You want to see the rejection block form at the low of the dealing range. This is exactly what I'd want to see. The rejection block forms at the low of the dealing range. From there, we break structure. We form a fair value gap. The fair value gap forms in the fair value gap partition of the dealing range, right? So that's exactly what I was showing in that image earlier. So the rejection block forms at the low of the dealing range. The fair value gap forms in the fair value gap partition of the dealing range. Then we have the breaker block and the fair value gap. And I can show you my actual trade I took. So I took an actual trade. Here's my execution. It was like 1.6R on average. And the trade I took, so I had the whole entire buy model framed. So here's the trade I took. 15, bought 15, sold 3. I just scaled out. But I knew the bias was bullish. And I'll show you guys the images that explain the thought process there. Man, I don't know why my computer's so slow today. So I'm just waiting for this to load. There's nothing I can do to make this go faster. So, yeah, this is going to come out on Thanksgiving. Hopefully you guys are having a good Thanksgiving. And I think we'll just wrap this up. There's more I want to talk about, but I need to wrap this up. It's going to be too long. Let me know if you guys like it longer or if you guys want it to be shorter. So, okay. What was I looking at? This was I lost my train of thought. Oh, yeah. I wanted to show you guys my thought process for my trade. So, first of all, I might be wondering, what was the trade? What was the trade? Well, when it loads, I will show you. Yeah, I'm gonna have to end this video because it's being too slow. I'm gonna have to end the video. Okay, I think it's because my storage on my computer is full. So I'm gonna have to end the video, guys. That's unfortunate, but there's nothing I can do about that. So it's out of my control. So I'm gonna end the video. If you want to see my trade, I posted it on Twitter. I'll see you guys later. Peace out.